Okay, guys, I'm very sorry for the delay with the previous session. Very glad to see you all here on screen. And I already made a short introduction of every speaker and would like to ask maybe Marcel to start our panel with a short review, just a brief about what actually have been done during that's a very long and intensive process of 3-year review on FX Global Code. And then we'll continue for any particular topics with our audience and with our speakers. So can you start your presentation?
So I'm Marcel from the Swiss National Bank. I was part of the 3-year review, both on the one side as a Swiss representative in the Global Ethics Committee, but I also co-chaired with Stephane, who's also on the call, one of the work streams of the 3-year review, the one on Algo TCA. And you all remember that the code was launched in May 2017. And to follow through on its earlier commitment to review the code after 3 years, the GFXC surveyed market participants and consulted with its members through 2019 to establish the priorities for its review. And the consistent theme, thank you very much, the consistent theme of the feedback was that the code remained fit for purpose and changes should only be as necessary. And the GFXC identified a few key areas where the code could continue to be developed further. Among them, anonymous trading, disclosures, Algo TCA, and execution principles. Later, settlement risk was also added to these topics. So the work was started in 2020, was then halted for a while due to the outbreak of the coronavirus pandemic, continued in the fall of 2020 and came to an end in mid-2021. And the new version of the Global FX Code was published in July this year. And here on this slide, you can see in a nutshell the results of the review. So 11 of the 55 principles were changed. As you know, there is an example section in the code document, which can add 60 examples in it. 3 new conduct examples were added to the code. 1 was deleted. And 3 new glossary entries were added in the code. 1 on algorithmic trading, 1 on direct market access algos, and 1 on transaction cost analysis, reflecting the topics that were newly covered in the code. And then there were 2 educational reports, sometimes labeled as guidance papers, published, 1 on last look, I guess a topic that will come up later in this panel, and 1 on pre-hedging. Those 2 documents are available on the GFXC website. 2 disclosure cover sheets were published, 1 for liquidity providers and 1 for platforms. And 2 templates were published, 1 on algo due diligence. It's a similar template, it's labeled here, then the disclosure cover sheets, so enabling a provider to provide information to a user, and a TCA data template which outlines what kind of fields and in which quality and in which granularity data is required for TCA purposes. The previous slide, most of them had an aim to increase transparency for market participants in the areas of anonymous trading, algorithmic trading, and TCA and disclosures. And this increased transparency is particularly achieved by these 2 disclosure cover sheets and the templates that I mentioned before. The disclosure cover sheets, their purpose is to make then really information available between provider and a user. Sometimes this information is already available. It might be in other documents, but to standardize this process of information delivery between a liquidity provider or a platform and the user on the other side. In terms of algo data and algo due diligence, a similar approach, a standardized questionnaire to make available information from the algo provider to the algo user, and a standardized template for TCA data with the purpose of seeing whether these templates are used now in the future. They are supported by the respective changes in the principles of the global FX code. And then there was, as I mentioned, this additional guidance material on last look and pre-hedging released. These are separate documents. They are not part of the code per se, but they should educate market participants and should further help to read the respective principles in the code. And lastly, on settlement risk, the use of payment versus payment arrangements is now more strongly recommended within the code. This was also already recommended previously in the old version of the code, but the language has been beefed up here to reflect the desire to use PVP approaches to settle FX transactions in the safest possible way. Let me stop here. I think that's an overview of what the new code version includes.
Thank you for this brief update. That's a huge work. Of course, it could not be described just for 5 minutes, but we tried. And probably we will go through some most important, points which used to be pain points for industry. And even our panel is headed as is last look solved. This question is probably most interesting among others, and XTX Markets, as one of the market participants, expressed their view quite clearly. So that is why I would like to start this discussion with Jeremy. So do you think that consequences after that, so the result which we've got after all discussions, is it appropriate to your opinion? Is it really solving the problem?
Thank you, Sergey. Yes, I actually think the problem is resolved, provided that other market participants interpret the guidance and the subsequent comments from Guy Debelle, the GFXC chair, in the same way that we do, and in the way which we think is very, very clear. The biggest issue with last look, and we put out a fairly lengthy paper on the subject, including some empirical studies based on real-world data provided to us by a client who showed us some very clear behaviors during the height of the pandemic in March and April of 2020 that showed some really quite worrying behaviors by certain liquidity providers. And I think that if you look at the paper, what we did was we tried to set out two different elements with last look. And the first is the issue of last look, as in, is it the right of the market maker to be the contract determinant, i.e. the last person to look at a trade and the one to say the trade is good or not when it's traded OTC bilateral? And the answer to that question is clearly yes. And actually everybody in the market agrees on that. The market maker should be the person who says the trade is done or not done when it's not executed on an exchange. The real question around last look has been around the use of this concept of additional hold time, which is I make you a price, you say I'd like to trade on that price, and then I say, hang on a second, let me see how the market develops over the next period of time before determining whether to accept your trade or not. And we think that is a completely unacceptable use and practice. we think that in the in the guidance, the updated guidance from last look, it was clear that the price check, which is conducted by liquidity providers and market makers, should be done without delay. And there was significant debate about the use of the word prompt versus the use of the word immediate. We did not support the use of the word prompt because we think it's a lower legal definition than immediate. And we thought it would continue to leave room for a lack of clarity, if you will, within the market. However, the subsequent comments from Guy Debelle, which have been backed up by others, are very, very clear. And that is that the price check should be done without delay. The price check should be done not in a way to see how the market evolves and see subsequent price updates before determining whether or not to accept the transaction. And that is the really key point about last look. If that issue goes away, then the market returns to a place where you handle more difficult flow by widening spreads rather than by adjusting the acceptance or rejection criteria of your trading mechanisms. And that is a really significant change within the market. Preventing LPs from using these artificial processes to avoid adverse selection within the market or to effectively cherry pick transactional portfolios should, in my opinion, be the aim of any market which is looking to self-regulate itself and set its own benchmarks for behavior. It's really important for my money that when we, as market participants, have the right and privilege of self-regulation, that we should use mechanisms like the code to set the very highest levels of behavioral benchmark and not the lowest bar, which we can all skip over in a heartbeat. And I think that with the changes to the code, the changes in the guidance and the subsequent clarification of that guidance from Guy, which I know will also be echoed by other central banks and other market participants from high up in the GFXE, then I think the issue is potentially solved, yes.
Thank you, Jeremy. Gentlemen, any other or additional views on last look? Who would like to comment?
Well, on my side, it's Vince, and by the way, thanks for having me here today with you. It's always a pleasure. Although we are connected remotely, it's always great to talk about those developments on the FX Global Code. I would say I would agree with Jeremy, right? So there is more clarity on last look, which has been a very popular debate on the market for many, many years. And it was important to have that guidance, right? That additional paper that Marcel mentioned before, which sits outside but needs to be read in conjunction with the code. The code attitude is clear, right? So there was no intention to ban that kind of practice, but obviously it's all about transparency. It's all about having that process laid out and communicated in a fair and effective way. And so disclosing in advance and making sure there is certainty about how an order can be handled by counterparties, it's improving, you know, the stability, the transparency of how the trading cycle evolves. Obviously, the last look must be used, as we say that the guidance paper, as a risk control mechanism, right? So it should be acted on price and validity. So checking the price tolerance and checking if operationally the details of the transaction I'm going to enter are okay, including the credit availability. I would suggest that there will be more attention for the market on trade rejections, obviously to understand the behavior if the last look has been applied. And this is actually something that providers of platforms like Refinitiv, right? We are providing more and more analytics and data exactly to the point of being able to detect those behaviors, to understand how the market is behaving. But to come back to the original point, as Jeremy said, I think there is now more and more clarity on the last look issue, and data and the analytics can only help to improve that situation.
And how do you find these disclosures templates produced by the committee? So is it a real game changer? Is it what we can say as a very useful and practical result of the review?
My take. Sorry, I don't know who wants to go first. I will pass the mic.
Maybe I can take this one. So the disclosure template, I think it's a great effort. So if you remember, one of the challenge of the code of conduct was the adoption of the buy side. So you have, 1,000 sell side participants who sign up to the code, but not enough buy side as a present. And this is based on the feedback we receive from the buy side to be able to standardize disclosure. So what is very good about the code of conduct and that 3-year review was it was a working group where from the buy side, sell side, and industry participants like exchanges and trading venues who participate into the definition of those templates. And so they will help to give more clarity as well to the buy side on using those templates. They should help for them to be adhering to the code too. And I think it will, the other thing we have to talk about the timing to implementation as well. We expect that the code will be between 6 months to 1 year to update and for people to follow those templates. So you have like a warm-up period where people can start to use that. The way it was designed, there was a pilot program for a few participants to try those templates and to give feedback as well. And during this pilot program, there was a lot of constructive feedback received to be able to adapt those templates. So I think, yes, it will be a very good step forward for the code in terms of standardization, but without limiting innovation in a way that one market participant who wants to adapt his transaction with its clients. So the templates are a lot of reference to the main body of the term of dealing between a buy side and the sell side. And I will recommend everyone to make sure you don't only look at the template. The template is used for comparing different providers, but you also, when you select your providers, and you have to look at the full terms to make sure you agree with the full terms.
Vincenzo, would you like to add? Jeremy, yeah, please.
Sorry, I was just going to add to that. I think Stephane is exactly right, and I think that if I look at the implementation of the first iteration of the code, one of the areas that was incredibly disappointing was the quality of people's disclosures. So there was a clear commitment from people to improve disclosures, but actually many people's disclosures ended up being essentially legal disclaimers. And, again, we highlighted some of those in the last look paper, but you only have to read through a number of disclosure documents, particularly from large LPs, to realize that at the end of the document, you're no better informed than you were at the beginning of the document as to exactly what practices people were undertaking and which ones applied to you as the consumer. And I think that the disclosure templates will help that change enormously, and they will focus people's minds also on being able to properly compare the liquidity which is being provided for them, or the behaviors on various platforms, et cetera, and be able to genuinely compare and contrast the liquidity that they're receiving or the way that they are trading on each platform. So I think it's a very important step forward. And I think there's a wider point here, which is about the interaction of the different elements of the code. So we very often talk about, for example, last look and the guidance around last look, or disclosures, or other areas of the code, reject codes, for example, as another area within the code. But actually, the thing which improves the market behavior is putting all of these things together and creating a kind of confluence, if you like, of rules and not rules, but of guidance, which creates a much better and safer market and prevents the kind of some of the loopholes and wriggle room that perhaps we saw in the first iteration of the code, and tightens all of that up. So I think it's a really important step forward.
Thank you. And more about practical results and things, I would like to put some focus also on changes which happened to anonymous trading on the ECNs, and maybe. Okay, let's start from this. Yeah. So, who could describe? So, what are those changes? Jeremy, can you continue, or Marcel?
Yeah.
Yeah.
No, I think some of the changes on anonymous platforms are going to be some of the most important changes that we see within the market. I think this has been an area which was broadly kind of outside of the reach of the first, but is an extremely important part of the market. I mean, if you look at the amount of business which is executed over anonymous platforms and ECNs, there is a huge proportion of the market being executed in this way, both dealer to dealer and dealer to client, and on a multilateral basis and a bilateral basis. So it's become an increasingly important area of the market. Therefore, bringing it effectively, properly under the scope of the code is really, really important. And we only have to look at the outstanding lawsuit in relation to behaviour at Coronex, which obviously I won't comment on any of the details of that, but to see that this has been an area, and it's always been an area where there have been a lot of rumours about behaviours and approaches that people have taken on these ECNs, etc. And so I think creating much greater transparency without making the ECNs the global policeman of foreign exchange is a really important change. And that, I think the code achieves that, and I think the panel on anonymous trading, the group who created the guidance on anonymous trading, should be very happy actually with the results of what they put together, because I know it was probably a very difficult process to go through. Putting some emphasis on, or a good deal of emphasis on providing much greater transparency really allows people to compare and contrast the behaviours of individual liquidity providers and individual platforms, and then they can really see and make informed decisions. I like the idea of client choice. I like the idea of buyer beware. I like these kind of concepts. They're the right kind of concepts, but they're only concepts which apply when people have the right level of information and transparency. And we've pushed a long way into the bilateral market for people to have much greater transparency of what's happening. We did that really successfully, I think, within the first iteration of the code. This triennial review pushes that even further, and I think to a potentially very healthy point of view, at the same time as we've seen huge growth in TCA and post-trade transparency in markets anyway. And adding the ECNs and the anonymous trading into that transparency, into that transparent world, really allows clients to make informed choices. And then if they continue to make choices which are suboptimal to them, then that's their own decision, and that's at their own risk and at the cost of their own investors. But they will at least have been informed decisions that they made.
Okay, thank you, Jeremy. Next question, maybe to Marcel. Marcel, so you was part of Algo stream work during the 3-year code review, and Algo trading, of course, is probably the key trend, and so everything will be traded by algos in the future. Some people think, and so that is why probably it's very important to know what actually. What are changes to principles or recommendations, or what are prospects of local regulation which could be applied to algo trading? So we have some discussion for Russian market as well, and next panel will cover that. So if you stay with us, probably you will take some information about the local development. But could you share your opinions about your work on this stream under the umbrella of 3-year code review?
Sure. Thank you, Sergey. I think one element that we discussed was when we explored also the existing regulations that exist in some countries, how far we should go in our work. And as I mentioned before, there were basically two outcomes, the TCA data template and the Algo due diligence template. And on the TCA template, we discussed two versions, basically. A more basic version that in the end also the feedback rounds that happened once these proposals were worked out showed that there was a preference for the basic version vis-a-vis the more extensive version of the TCA data template. So in the end, the basic version was published, and we will see what kind of importance it will take. There's no absolute mandate for market participants to use this template. It's an offering, basically, that is underpinned by the change in Principle 18 of the FX Global Code, which recommends to use the template and makes this offering by providing the template. But down the road, we obviously have to collect feedback again on how widely the template is used. Is it fit for purpose? Are there any changes required? Do we move towards a more extensive version of the template? Or is any other institution outside of the GFXC willing to undertake the work to improve this template going forward? The same with the Algo due diligence template. Same as for disclosures, it's a questionnaire that covers various topics that you need to tackle when you use Algo. So it starts with conflicts of interest, allocation policy, routing policy, segregation policy, safety features, TCA, and FX swaps. And here again, as I mentioned in the introductory remarks, the aim is to put together information in one document that is helpful for an Algo user to have, and it also should help the Algo providers to have a standardized set of questions where they can prepare their answers within. But again, here we will see how this will be used in the market. As Stephane mentioned, there's now how do you label the warming up period? The expectation is that within 6 to 12 months, the signatories of the FX Global Code that are registered with their statement of commitment in the global register, that they will update this and they will be compliant with the new version as published in July. And that means we will be able to see towards the end of this 12 months period for the first time in earnest how widely adopted these new proposals, these templates will become. It will certainly be a topic again at one of the upcoming GFXC meetings to reflect upon that and take in more feedback from market participants on these instruments.
Thank you, Marcel. And next to another pain point of FX market industry, I would like to address next questions to Stephane. ACI is actually take part in some legal cases which are close to the conflict of interest which arises around the pre-hedging practices, and in some sense, could you maybe tell your opinion if the job is done in that area with the publication of a special paper on the topic, and do you feel that all appropriate steps were done in changing text of FX Global Code principles itself in relation to pre-hedge?
Yes, thank you, Sergey. And it's true, maybe a brief comment on the HDR work on that. As you know, at ACI, we have a working group on CFP, where we provide expert witnesses on some of the legal case around those topics. And we've been doing that for many, many years. So we have a look at a lot of those cases, and we try to help the ACI member in those cases. In this instance, as you said, right, the pre-hedging was a guidance document which sits next to the global code and not part of the global code, but it's a very important document which quite a lot of details was written by working groups to be able to explain the pre-hedging concept and to make sure pre-hedging in FX, it's a process who can exist and who should continue to exist to manage large order. But you have to be careful of how you handle it. And this document give different example of the behavior to attach to this and the processes you should go around it. And also the disclosure you should do when you apply pre-hedging for your clients. So it's really a way to mitigate the risk of a large order in the best interest of the client. And I think it will help because it will give that guidance to people who still have questions around the pre-hedging process. It may help also in case of conflicts to people to look back to those documents to say this is what is the guidance from the global FX group. And it's also an education process for people who don't know too much about pre-hedging and who probably have uninformed views to be able to read the document and to learn about it. So yes, same that the other working group. I think there was a lot of good debate and healthy debate to be able to come towards a conclusion and to be able to publish that guidance on the global website for everyone to be able to read and download it there. Quite positive from my side.
Okay, thank you, Stephane. And as we approach into the end of our panel, I would like to ask Vincenzo about Refinitiv response to a 3-year review and maybe some summarizing words about this topic.
Yeah, thanks, Sergey. Well, I would start making a comment just to try to find a fil rouge in all the comments from Marcel, Stephane and Jeremy. There is an element of transparency, which is clear into this, but transparency per se is not useful, right? If we have disclosures done in different way, with different formats, with different views, you cannot allow the second step, which is comparability. And this is a common trend that you can see in the market. You think about also what is happening in the sustainable finance, where there is now a rush into the taxonomies and having standards exactly to be able to compare and to take an informed decision. So all the disclosures, the templates are all going into one direction to put the market participants in a better position to make informed decision. Obviously, when it comes to the what is happening on our side and how we contribute to that, obviously LSEG and the FX business are supportive of the FX Global Code we signed in June 17 at the very beginning, and also LCH, which is part of the LSEG group, subscribed 1 year later. I think there are several steps and several investments we are in related to following the involvement of the code. One I mentioned, data and analytics, exactly to detect, right, and to understand and give more choices when it comes to transaction cost analysis, for example, what is happening and how the market participants are behaving, what kind of service has been provided to other market participants. But obviously, as we mentioned, anonymous trading, right, at some point during the discussion, we are also developing our venues and creating new venues via an important re-platforming exercise taking into consideration when developing those venues all the requirements of the code, including matching, for instance, the tagging requirements, I would say best practices, never requirements, but always best practices defined by the code. There's a lot to be done there, and it's important that all the new developments follow the codes. So to get back to another point we mentioned before, to put the code in action, right? And make it really part of the day-to-day working life in the FX business, which is shaping and continuously reshaping itself with its global and diverse nature, for which the code is actually needed.
Thank you. I would like to ask to run a poll of our participants. So we would like to ask our auditorium, our audience, so about signing statement of commitment to FX Global Code, and please take part in that poll in your Slido page. Please go here, because you know, gentlemen, that in Russia, so we're talking a lot about it, but still we have very few but very important organizations who already signed statement of commitment. The first was Moscow Exchange, the second one Central Bank of Russia. And I need to announce that today we have a news, because the Central Bank of Russia, they issued official information letter advising financial credit and non-credit financial associations and self-regulating associations in financial markets to implement principles of FX Global Code. And so we are going to another stage. Now we have not requirements but official recommendations from the Central Bank of Russia, and we will probably start our panel, next panel from this announcement. But before that, I would like to see and share with the speakers this poll. And we see, interesting, that we see quite a lot of answers that that statement already signed, because probably there are a lot of people from Moscow Exchange and Central Bank, I would say. But also, I think those who are working for international global organizations, they also think that the institution signed the code. Okay, so voting is going on, and we can have just final words for the panel if we can switch back to our Zoom speakers. So guys, I shared with you our last news, and just probably a few words if you have to say something for final minute.
Shall I start?
Yeah, please, Jeremy. Yeah.
So I think, from my perspective, one of the most important things about the global code, as I mentioned earlier, is for any industry to have the privilege of self-regulation is an unbelievable privilege, and it should be treated as such. And therefore, I encourage all market participants to view the code as a good, solid benchmark, but to ask themselves what more they can do and how much further they can actually go in making sure that the practices that they undertake are good market practices in line with how they would like to be treated themselves and in line with what their customers should learn to expect from them. And I think, and also, I guess, how they would be regarded by as individuals. And I think that that's incredibly important. Our ability to self-regulate is entirely dependent on our ability to set the highest benchmarks and to continuously apply them. And unfortunately, there are still too many practices in our industry that don't meet the highest standards of behavior. And that just has to change, because otherwise we will end up being fully regulated. And we all know that in fully regulated markets, sometimes you get outcomes that are very suboptimal, not for want of good intention, etc., but because industry participants' views are less implemented within those regulations. So we should all treat that privilege with the respect that it deserves and behave as well as we possibly can at the code standard and beyond.
Thank you, Jeremy. I think that's a good words to end our session, because we are really exhausted our time. Thank you very much. And please